And of course, we are, what are we seeing, guys? We're waiting for a very key, a very important meeting from the ECB. We've already heard from the BOE a little earlier. They really did not do anything. They kept their rates at 0.5. They kept the asset purchase facility at 3,755 billion pounds. And okay, let's start with that. So the BOE opted to hold things steady, but there is growing pressure, there's growing belief out there that it is a matter of time before the BOE will start to normalize rates. Before the BOE. Okay, yeah, I actually shut up for a while there. I had a message that I had to reply to. Anyway, where were we? We were talking about the BOE, and the BOE kept rates steady. They kept the APF steady. But we said that it's a matter of time before the BOE will do something. It's a matter of time before they remove 50 billion or maybe even 100 billion out of the APF. And if or when the BOE starts this, let's take a look at the context. Let's take a look at the general environment. So the BOE will soon be starting to normalize. On the other hand, you've got their neighbor, okay, across the English Channel. You've got the Eurozone, which is just getting started with its own money printing scheme. So what are we looking at here? Sachin, let's talk big picture first. And big picture for me is, what currency pair can we look at, and can we say, I can just jump in that and I'll calculate my risk and I'll just leave it be, because I expect that policy in one central bank is going one way and policy in the other central bank is going the other. And if we have a situation like that, we are really looking at having a currency pair which would give us a nice trending market. You know what? And that's why, before we look at anything else, and before I even start talking about Euro and the ECB, which is really our main topic, let me just acquaint you with one chart, and that's this chart, EUR GBP. Why do I want to, introduce you to Euro Pound? Simply because sooner or later we will have the Bank of England, if not raise rates, then remove asset purchase facility. And that is the kind of central bank action that leads to a stronger currency. If you raise interest rates, you have a stronger currency. If you remove money from the system, basically you reduce the amount of money in circulation. That strengthens the currency. And that's the likely policy direction that the BOE is facing. And once they do that, we open the way for a stronger GU. And then on the other side of the coin, we have the ECB, which is just getting started with its own money printing scheme. And look at what happened in your Euro Pound when the BOE started its money printing back in 2007, back in 2010. You have those big spikes. So what I'm saying is, this time around, it's not just BOE doing something, but we are getting to the point where you've got BOE removing liquidity while the ECB is adding liquidity. If a central bank prints money, if a central bank adds liquidity, that weakens the currency. So over. Now, this is something, I'm not saying this is going to happen now, but this is something that we really want to be in once it gets started. That next sell-off in your euro pound, that push towards 50 fib would just be the start. I'm talking about break 50 fib and look for this drop. Look for when your euro pound drops back to your 65, 85 area. That's something that's coming. How do you know that that's coming? Well, the first step would be, can we confirm how much the ECB plans to print? What kind of assets does the ECB plan to buy? Okay, and what kind of duration does the ECB think they will be implementing their easy money policy? Okay, so that's the start. That will open, or that should pave the way for us to think about the bearish euro pound. And then once the BOE starts to either raise rates or removes the APF, that's the other shoe that should kick your euro pound down through your 50 fib retracement of the rally from 1999. Okay, so that's how, is it 99 or 2000? From 2000. Anyway, that's how big a deal we find our central banks facing right now. All right, now let's talk about the announcement. Let's talk about the ECB itself. So what are we expecting? If you asked me last week, I would have said, well, we're expecting the ECB to print money. Maybe the ECB will be, well, okay. So why does a central bank print money? A central bank prints money to provide liquidity. They do that if they see that the economy is slowing down, if there's not much growth happening. They do that if they see that people are not investing. And clearly, whatever investment that's going on is still very slow. So as the ECB starts to print money, as you increase the supply of euros, you weaken the currency. So that's a given. That's textbook analysis. Print money, weak currency. The question for us today is just how much will be printed? Okay, how big a deal will this decision of the ECB going to be? Are they going to print a trillion euros? Remember, you talk about UK and their asset purchase facility is 375 billion pounds. And you think about just how big is the UK economy compared with the Eurozone economy. So for me, at a minimum, the ECB should be talking about, yeah, I'm going to print a trillion euro. If it's going to create a steer in the market, if they should target something like that. Maybe they talk about 100 billion euros now for this particular sector. 100 billion euros to buy the bonds of certain governments. Although that's a gray area whether the ECB can buy government bonds. Technically, they shouldn't be doing that. Technically, there are rules against the ECB doing that. Okay, but we start by looking for these kinds of numbers. And 100 billion for me, in fact, I would be disappointed if it's 100 billion. Now, let's talk about trading. So how do we hey Mark. So how do we trade this particular news? We trade the news depending on what we hear. So consensus forecast now is for rates to be cut. But there's a lot of rates. Okay, there's a referee rate for one. Which is the more important? There's the deposit rate, there's the referee rate. If it's an across the board, all the rates are cut by 10 BPS, then that means that some of your rates your deposit rate will go negative in the Eurozone. So if the announcement is all interest rates are cut by 10 BPS, then that means that there's negative rates for some. And that's really the kind of news that you want to hear if you're looking for a further sell-off in your euro. If you're talking about, can I see my euro ease down to the 34.76 area? Can I see my euro head for 1.3? Okay, across the board rate cuts. Now, if that's accompanied by an announcement of, yeah, we will cut rates across the board and at the same time we're going to print 1 trillion euros, that's a shocking number. That's a bazooka. And that to me will be argument for a further decline in euro. But there's always a but for everything. There's always a caveat. If you look at your chart, ever since the Bundesbank, the German central bank, said that they are willing to consider asset purchases, we've already seen our euro sell off. We were working the 3,900 level. People were even talking about pushing above 1.4 when we heard from the ECB the plan to print money. So what am I saying here, guys? I'm saying that this chart has actually priced in the idea of printing money. The idea of a rate cut, that's a bit new. It hasn't been around much. I think the first time I've heard of it was last week. And I was incredulous when I first heard that notion. Generally speaking, a rate cut is the last tool that a central bank would want to do, would want to touch, especially in the case of the ECB, where if they cut rates now, they really don't have anything else that they can do. A rate cut by the ECB now would likely lead to them being caught in a position where they will end up with no bullets at a time when they could need more. What kind of situation would this be? What if the recovery suddenly stalls? What if you suddenly see a decline, negative manufacturing activity, negative services index? How will the ECB solve that? Generally speaking, in Europe, that's not the ECB's problem. But these days, when politicians can't really act, it's been left to the central bankers to do something. That's why, as I said, I was incredulous when I first heard that there's now talk about a rate cut. And now it's a consensus because there is this, there's that idea that you only cut rates, especially in the case of the ECB where it's already 0.25 BPS, when there's nothing else that you can do. The other thing that a central bank can do is, as we said, it can print money. So it's a question of how big is money printing. Because we've priced in money printing already, we've had that 400 pip sell-off, I would be disappointed if the ECB says, I'm going to print 500 billion euros. 500 billion euros, I think, will not cut it. Next to the US, the ECB is, rather the Eurozone, is the biggest economy. Sure, there's China. You know, everybody talks about China. But you talk about actual economic size. In fact, it's not next to the US, but the ECB is at the Eurozone is actually bigger than the US when it comes to aggregate economic size. So 500 billion euros is a drop in the bucket, which we've already priced in. I need to hear that figure. I need to see that big T. Give me a big T, and we could call for a further sell-off in your euro. Now, here's the oddball scenario. What if Mario Draghi comes out and says, yes, we're going to cut rates. Yes, we're going to print money, but we're not going to do that now. So how do you think the market would react to that? No immediate money printing, no immediate rate cut after market already sold your euro off the past month. That kind of news opens you to the potential for a sharp bounce. If you look at your chart, you actually have a double bottom in your dailies. But because we have this ECB announcement, I've been ignoring that double bottom. So if the ECB disappoints, no immediate rate cut, no immediate money printing, no sense of urgency, then your focus ought to be first, can I push above 36.50? After that, can I make a run to your 37 area? Maybe even quickly go beyond it. Imagine right after we first heard about rate cuts, or rather, we first heard about the possibility of printing money, you saw a sell-off that was worth how many pips? 150 pips. You know, it used to be 150 pips wasn't such a big deal. Well, that is something that we risk. And that's actually the easiest trade that we can get if we are disappointed. More words and no action. Hey, Greg, because I'm from FX Instructor, that's why the voice is familiar. So guys, more words and no action now by the ECB will give us a pretty quick effort to trigger this double bottom in the dailies. Okay, so that's one of the, well, that again, that's the easiest trade. The more difficult trade is, how do we react to maybe the refi rate gets cut by 10 BPS and the deposit rate stays at 0, it's not negative. There's no cut there. And the ECB thinks about, well, I'll try to get my feet wet. Let me print 200 billion euros. 200 billion against, I don't really know the real number now, but let's put it this way. I think ECB economy and the Eurozone economy is more than 10 trillion. So if you get 200 billion against an economy that size, that's nothing. And if they say that, how do we interpret it? Is it a cause for us to pull back in our euro? Or is it a cause for us to see a break of your floor, get a follow to sell off, get to 34.76? At this point, guys, I would say, I don't know what's going to happen. That's the worst kind of combination that we hear from the announcement, because we cannot figure out what's the clear path ahead if we get a combination rather than a straightforward cut everything, print me this much, print me 1 trillion. JP, these aren't really something that is part of what we're doing right now. Well, Forex Gal, if there is no change in policy, no money printing, no rate announcement, no rate cuts, then Draghi's press conference will be very, very critical. But I expect that even if it's a no action scenario, even if they don't do anything, people will still be disappointed, people will still act, And we'll still probably see your euro bounce, your euro strengthen on a lack of action on the part of Mario Draghi. Okay, now as far as the indicators are concerned, it's not really part of the way I normally look at this chart. I was just testing my EA earlier. So I had the parabolic SAR. I use it to look for a tail stop. I use it as a trail stop if I'm playing breakout trades. Yes, it's a parabolic SAR. It's a good tail stop, tool. But that's not really part of the plan as far as trading your euros concerned right now. I just had it in my screen because I was studying the behavior of the EA. You believe in having sell limits out there up around 36.50. Well, the problem is 36.50 is 45 pips away from where we're at. I would much rather jump in with a straddle right before the release. 10 seconds before the release, I'd rather straddle it and see if I can have a nice bullish or bearish breakout. If I wait for a spike to 36.50 and we end up with a really disappointing announcement, might be next quote would be 37. So I'm not quite a believer with that notion. That said, projected high for me is at 36.40. So in theory, it's something that sounds nice. Expect dealers to jump prices up, and then you see a follow-through pullback. You see markets react. You see a follow-through. You see things pulling back. So it's not really a plan that I would probably go for. I'd much rather straddle, get the breakout, see what kind of news did we get. Does it justify a sustained rally, or does it mean that you just saw a bit of a spike and then you pull back? How far will GBP/USD go? I wouldn't really trade GBP/USD on this news. What happens in GBP/USD will be a factor of what happens in your EUR GBP. So say we get 1 trillion money printing, we get all interest rates cut. Then at that point, I would expect a big sell-off in your euro pound. I would expect to take out your previous lows. I would expect a test of your floor around 80.82. And if that were to happen, I would expect your GU to also be surging strongly. Well, guys, we are a long way from our announcement. We're a minute. Actually, we're 58 seconds away from your announcement. Well, something's been happening for Kiwi lately. Kiwi's retreated the last couple of weeks. So I'm not too comfortable about what your Kiwi has done. That said, a money printing scheme would probably see a further decline in your EUR and ZD, but I'm not really that bearish in EUR and ZD at the moment. You just have a weak Kiwi at this point as well. So it might be difficult to see sustained weakness in your EUR and ZD. To be honest, I don't know why it's moving. It shouldn't be. It's supposed to be a quiet pair. It's supposed to just trend up. but it's been volatile of late. All right, guys. We should be having that announcement now. Let me just listen. Wow. So are we getting some disappointment here? We've got your euro rallying up. I'm not hearing anything yet. Hey, thanks, FX Rodan. Okay, so they did a rate cut. Is it across the board? Let me just listen, guys. Okay, so they cut refi. The question is, did they cut the deposit rate? Remember, there's actually a lot of rates that we ought to be talking about. Nothing yet on the deposit rate, guys. Oh, thank you, Ian. All right. That kind of news ought to be bearish with your euro. We've been swinging around. What's the strategy? I would say, hey, if you have the stomach for it, the news is about looking for weakness. If you don't have the stomach for a volatile market, stay out. Wait for the close of the R. See if you can close the R below 35.94. But the combination is bearish. We just need to know if they're going to print money as well. Grabe ka. So guys, deposit rate's negative. That's what the market's looking for. Marginal lending rate at 0.4. That's still a cut. And of course, your FT is at 0.15. We haven't heard yet about any money printing scheme. Still, if it's across the board rate cuts, then your euro ought to be vulnerable enough for us to look for a close below your 35.85 area on a daily basis. Give me that, and I would be calling for 34.70 in, I don't know, maybe as early as next week. Let me just see how your NFT will turn out later. So we don't have any announcement on money printing. So what do? You've got your press conference in, let me see. You got a press conference in 42 minutes time. Wait for the press conference. See what's going to be said there, because that's likely to be the excuse that you need for your sell-off in euro. How's the rest of the market responding to all of this? I guess your GU, sorry. Well, your GU is starting to sell off, but I would point this out. You cannot have a big drop in GU if your euro pound is dropping. And your euro pound is dropping. So for me, you'd rather want to be out of GU, maybe even try to buy your GU from a good support. Okay? If this euro pound's dropping, you don't want to be selling your GU, because dropping euro pound means that you could find some support for your GU soon. Well, yeah, and that's the kind of statement which means that you're going to get a lot more whipsaw later. So if you're gonna join this market, well, we know the direction. The direction is you short it. But the question is, um, if you short it, okay, this is a demo, okay? This is not a real account. This is a demo account. If you short this, do you have the stomach, again, to see markets moving 20 pips, 30 pips in a couple of minutes? We've been so used to very quiet markets the last few weeks. But again, guys, this is a one-directional market now. We're now talking about getting all the way down to 34.70s as early as next week. So FX Sudan, thank you for sharing that. Again, folks, that means that although you've already heard the decision, you've got money, you've got the rate cuts, we could probably expect money printing to be announced, details of it anyway. We could probably expect them to, well, again, the big number is going to have $1 trillion. If I get $1 trillion, that's large enough that despite us having had a big move already, I would look forward to maybe even doubling that if we get $1 trillion printed. Now I think the other pairs are just getting dragged along. They really should not have a fundi reason for correlation with Mexican peso. But, you know, when things go crazy, people just look at their charts and said, oh, I'm going to jump as well. All right, guys. So long run candidate for us, given a choice, Euro or GU? Give me a sec. I have to sneeze. Sorry, had to sneeze there. Well, for me, long run. For now, your GU is a bit active. Like we said, it's getting triggered by all the volatility. But long run, we really would want to look for Euro pound weakness. You'd really like to trigger a break of that 50 fib level of your rally from 1999 or neither from 2000. So that's a 14-year rally. You'd like to get to the 50 fib of that and eventually push below the 50 fib of this rally. Well, you have to remember that there's a big correlation between your euro and the Swiss franc. At times like this, you really want to focus on, for one, normal standard fundi explanation for that is trade. Biggest trade partner of the Swiss is the Eurozone. So anything good or bad that happens to Europe has an implication for them. But we're saying this is the time when you want to focus on situations where the policy of one country is going one way, policy of another country is going the other. We've said that EUR GBP is a good candidate because of BOE and Eurozone policy. I just remembered the same could be said for your Aussie and your Euro. people are talking about the RBA raising rates, although raising rates by 2015 and not this year. Look at your GU, guys, not really getting anywhere. So it was just dragged as a knee-jerk response, but it doesn't support the notion of a weaker euro, or rather a weaker GU. This is more about having a weaker euro. Now let me scroll up if there's anything that I missed. All right, folks, any questions? Let me just check your EUR-AUD. So EUR-AUD, we've already had 100 pips of price action. Average change is 90, so not much. The problem, I guess, is that when you look at it, you really find your EUR-AUD already below the range, below its historical range, below half of its historical range. There's not much argument that says this is coming from an expensive price area. Euro yen. Okay, let me take a look at that. Well, what do we know about Japanese policy? The BOJ has said that it's now time for the third arrow. It's now time for structural reforms to happen. So that means that we cannot just expect your EU, your yen pairs to just go up and up and up. We're now waiting for, we now need a lot of excuses for your yen to move, for your yen to go up, which suggests that as far as your ERDPY is concerned, you have few reasons to expect sustained push on the upside for EUR-JPY. Hey guys, okay, looks like we've run out of time. View for dollar yen. Well, as far as this goes, I really don't want to touch it. It's taking the back seat ahead of today's, or given today's releases. Maybe come tomorrow, we can look at it again. Certainly, I would be interested in looking for buys of 102.36 as we find that your jobs data actually is still coming out strongly. So for now, it looks bearish, but preference would be to buy the dips. It would take news, something special, to push above your 102.78 region. Okay, guys, so thanks for joining.